To see so many of you popping on here now on another beautiful Sunday afternoon. Amazing day. We've got that cold front coming through. Who's looking forward to a little bit of cold weather starting to come through? It's coming. It's going to make its way all the way down here. We're down in Naples, in Florida, and although it's a little hot today, we're getting to that time of year where it's enjoyable to be down here. So certainly going to maximize and just take full advantage of that. But like I said, amazing to see you all hopping on here. Today I want to talk about really where does the market go from here. We talk a lot about saving, budgeting, in particular about investing as well. And one of those things we need to understand, especially when we have weeks and really a month like we had that was October, it was not the greatest month, especially if you are bullish and you're invested in crypto. There was quite the crypto sell-off, although in the crypto world they tend to call October Uptober. It was not Uptober, it was very much down. It was only the second October that crypto, Bitcoin in particular, had ever been down. So we'll be talking a lot about this technology sell-off. Is it really an AI bubble? What is it? What caused this to happen? Is this going to continue? Or is this an opportunity to buy? And I want to pick up where I left off last week. Last week we spoke a lot about the long-term game of investing. And I want to come back to that because that is an area I focus on very, very heavily. And it's an area that I'm very, very passionate about. And there was a study, and this is data-backed stuff. This isn't just, stats you pull out of a hat or anything like that. If you look over a 10-year period and you invested and stayed invested, and perhaps even invested continually over that 10-year period, you would have X return. But if you missed in that same 10-year period the 10 best days, your return would literally be cut in half. I'll get you the exact numbers maybe for next week so you can put some math to it here. I'm talking over a 10-year period. If you just missed the 10 best days, what does it take in order to have a best day? Well, in order for there to be a best day, there has to be a down day. There has to be a pullback like we experienced all of October, but in particular this past week, especially if you're invested in crypto, especially if you're invested in the Magnificent Seven, as they're called. Lately, it seems more like the S&P 493 and the Mag 7. They're a part of the S&P 500, but in reality, it's the S&P 493 lately, and the Magnificent Seven. The Magnificent Seven is what really kind of caused a lot of that pullback that we saw. Of course, they're your Microsoft, your Nvidia, your Tesla. The technology pullback that we saw was related to that because everyone's fearful there's an AI bubble. But I want to tell you and remind you, just picking up where we left off from last week, if you miss the 10 best trading days, your returns over that same 10-year period would be cut in half. This is the time you stay the course. This is the time if you're blessed enough that you invest more. And I see it all the time, you and Moola doing that. It's amazing that you understand that. The rewards will be vast for doing that. Because let me just help you understand, how does a pullback really work? Let's do some basic math. When a stock drops, let's say 20%, it doesn't have to go up 20% again to get where it was. In fact, if the stock drops 20% into its new price and goes up 20%, that does not put the stock back at the original price. Let me do the math a little bit easier for you. I have a stock that's $10. Hey, Tyler, great to see you. By the way, Lori's driving, so that's good. That's good. Hopefully she's driving a product that you guys sell. I'm just saying. Tyler's in the auto business, so that's why we can joke about that. Let's say, and Tyler, you'll understand this because you're very good at math. Let's say we have a stock that's $10 per share, and it goes down, right, 10%, right? So it pulls back 10%, meaning in order for that to happen, 10%, $10, it pulls back what? It pulls back $1. It's now a $9 stock. But a $9 stock going up 10%, well, that's only 90 cents. Do you follow me? Meaning going up 10%, that same stock just went up to 90 cents. It went up to $9.90. Are you following me? When you have a pullback of 10%, in reality, that stock needs to come up about 15% to return back to its previous levels. This is why I get so excited when I see a stock that's been beaten down that I know is going to come back to its previous level. Because if it's been beaten down 40%, and there were some of that this past month, it means it needs to come up 50, 55%. It depends on the use case to get back to just to get back to where it was. And if you believe, hey, that's really a $50 stock all day, that's really a $6 stock all day, you look at the historical charts, it's been there for the past, 3-4 years, coming back to that same point. It's a little late to the party now, but hopefully you got the Moola 5 report. Let me tell you, 2 of the Moola 5s did exactly that. And these are not recommendations. They were recommendations previously, but since then they've already reached back to a lot of their levels. The first one was the United Health Group, UNH, which was just beaten up over a lot of things. And it started, unfortunately, with a very sad event where the CEO was the same CEO that was shot in New York, right? These sort of tragic events that led to all of this, to really the stock being beaten up. We put it in our Moola 5 report, and if you bought at that time, you are sitting up about 40% right now in a very short period of time, maybe 45 days. The other one, and Tyler, you can relate to this one, you might have saw it, is Goodyear. Goodyear, GT is the symbol, and again, this is not a recommendation anymore. It was about 60 days ago. I think on the Moola meter, I don't think Goodyear is recommended much more on the Moola meter because it's already made its run back up to where it was. If you look at Goodyear, it's been an $8, $9 stock for the past 5 years, just kind of working. Sometimes it'll peak as high as 12, come back around, but it's an $8 or $9 stock. That's where its market cap lives. That's just where it hangs out. So Goodyear got really, really beat up, fell to about $6. The Moola meter flagged it for me to even see it. And I thought, wow, this is an $8 or $9 stock all day. It's sitting at $6 right now. This thing's gonna work its way back up. And lo and behold, now it's sitting in the 7s somewhere. You've got some change maybe left that you can make on it, but it's not the exciting deal that it was 60, even 45 days ago. It's really, really run up on that. And that is what I need you to understand, is that pullbacks are opportunities. Right now, if you own any shares of IBIT, or any crypto for that matter, you're starting to go, is this crypto thing for real? Like you're starting to be a little skeptical of it. You're starting to really wonder, is it really going to be the digital gold? Like, I understand when fear and these thoughts have crept in. And I'm here to tell you, the pullback is an opportunity. In fact, if hopefully you're using Sophia inside the Moola app, which is your smart investor on autopilot. I'm always watching what Sophia is doing algorithmically on the back end. I'm able to see what it's doing in each person's portfolio. And what it was doing for the vast majority of portfolios this week was picking up IBIT as Bitcoin kissed under 100,000. And Sophia was smart enough to be picking that up for many of you. There was a few risk profiles that it did not, and I respect that because some of you have different goals and different timelines. Crypto is a long play. But, and by the way, I fall into the camp, just to be very transparent, I fall into the camp that I believe Bitcoin will be at $1 million, and I believe so by about 2030, which is 4 years away. I believe somewhere in the year 2030, not much more than that, and this is recorded, so that's great, that you'll be looking at $1 million Bitcoin, which is a 10x return. Right? That is my belief. Now, that is not a recommendation. You've got to find your own belief system. And why do I believe that? I am not a big fan of the meme coins. In fact, the kids and I, and Ella and Gavin are probably watching this. They're driving to Universal right now. They're maybe watching this on their drive. We were looking up funny meme coins, and there's plenty of funny. There's funny meme coins. What's a meme coin? It is a coin that delivers no technological value, essentially, and it is a meme. It is funny. Your Dogecoin fits into this. We were asking ChatGPT what are all the funny different meme coins, and there are a lot of funny ones. There is Doland Tremp and Geo Bowden. I'm not making this up. Those are real meme coins with their names flipped around. Those are not. Don't invest in those. I don't invest in meme coins. When I talk about crypto, this is the problem. And let me take a sip of coffee real quick because this is a coffee show. This is my happy mug. This is what Sophia calls it, the happy mug. It does look happy, doesn't it? Crypto did a very bad job in marketing. And I see the question, why would Bitcoin crash? Let's talk about that. Let me share this thought, and then we'll go into the Bitcoin thought as well as a potential for a crash, like you said. When you look at Bitcoin, or any crypto for that matter, cryptocurrency, just that name alone has done a terrible job marketing. Crypto sounds creepy. Crypto comes from cryptography because of how the blockchain actually works. It is correct from a technological standpoint because it is a cryptographic technology, but crypto sounds creepy, doesn't it? And then to call it a currency, you're like calling it a really creepy currency, like a currency I don't understand. And yes, there are tokens that can be used as a currency. But let me tell you something. At the end of the day, what you should really be investing in is the technology that is behind all of this. And I need to do a whole video on this, probably a multi-part series on this, because there's so many that don't understand cryptocurrency. For example, Bitcoin runs on what's called SHA-256. You don't need to understand all of SHA-256, but SHA-256 is essentially a hashing algorithm that it uses cryptography to create cryptographic hashes, and when miners on the blockchain, what they're actually doing is verifying these hashes to perpetuate the blockchain, which is essentially a ledger. And if that was way over your head, that's totally okay, because you don't need to understand all of that. What you need to understand, though, is there is a technology that is driving Bitcoin. Now, to the comment that said, what would cause Bitcoin to crash? Well, Bitcoin has lately been trading more like a commodity and less like a technology, right? However, if that technology were to get hacked, the biggest threat to Bitcoin right now is quantum computing. If quantum computing were Bitcoin, SHA-256 is not quantum computing ready, meaning quantum computing could work fast enough to outdo all of these miners and everything else. And there are wallets that are not quantum proof just yet that could be at risk of hacking. There's many ways this could all unfold. There's going to have to eventually be a hard fork, it's called. And you sound, based on your two comments there, you sound pretty sophisticated in the technological space, so you probably are picking up what I'm putting down here. Some believe it's not as immediate of a threat. Some believe it's a more serious threat than others. I fall somewhere in between, thinking we need to get some of our better minds working on this and solving this, because I'm a big fan of quantum computing. I don't have any quantum investments just yet because I still believe it's too early. But I think in the next 2 to 3 years, that will be a much more serious conversation. And that could cause an issue. Look at what happened to Ethereum that caused a lot of this sell-off. And it wasn't really a hack per se. It was taking advantage of an opportunity in Ethereum. If you follow the crypto space, look at the two brothers from MIT that they just received a mistrial over their sandwich bot trading, we'll call it. Very, very sophisticated technique. My point is there are still some flaws that can be exploited, and that can cause your sell-offs. It caused an Ethereum sell-off this week. What else is going to cause a sell-off? Just being honest with you, you look at the largest holder right now, Strategy, Michael Saylor. The man can move the market, literally, with his buys and sells. You look at the original crypto creator wallets that are quiet under the pseudonym Satoshi Nakamoto. It's a pseudonym, not his real name. If those wallets woke up one day and sold, what would happen, right, with that? So, is it tulips? Is it Dutch tulips 2.0? No, because if you look at it, well, okay, are there cryptocurrencies right now that are Dutch tulips 2.0? They're out there. Is it Bitcoin? Is it Ethereum? Is it Cardano? I don't think so, because they have the technology behind them. Meme coins, I am not a fan. I don't own any. I'm not a fan of it. It's pump, it's dump, the market moves it, the order system moves it too much. Could that be your tulip 2.0? Very, very possible. And if you don't know what we're talking about when we say tulips 2.0, I don't have time for a whole history lesson with it. But yeah, to your point, I think those that have a true technology, Ethereum, think of it this way. And I don't mean to turn this into a whole crypto conversation, I apologize, but Ethereum is set up to be the blockchain that allows for the tokenization of assets. The SEC, Paul Atkins just put it through about 3 weeks ago. If Ethereum is the blockchain for the tokenization of real world assets, which is like so forward thinking, it's not even ready just yet, like I believe that will be the lasting technology that will spur Ethereum on. I believe continuing to use cryptographic technology on SHA-256 will keep Bitcoin going. Another big project I believe in is Cardano. Big fan of Cardano and what they're building. I believe even some of the lighter, faster blockchains, like a Polygon, like a Polkadot, like a Mina, can keep going. Meme coins, I don't think stand a chance. I mean, I'm amazed how much market cap Dogecoin has, honestly. You want to talk about a tulip, I think it's that. And I think love Elon, hate Elon, it doesn't matter. I think he has a lot to do with the Dogecoin movement. And Rebecca just hopped on and said, what are we talking about today, Jason? Well, I was supposed to be talking about what happened in the market this week, the stock market in particular, but I got on a crypto binge. I'm passionate about all things investing, but I got into crypto. I got on a left turn there. Back to the market. Let's move to technology, though. Let's move to why was there a tech sell-off? You get sell-offs when people believe what's happening is unsustainable. People believe right now that there is an AI bubble. The scary thing right now is people believe that we're doing these circle deals. Well, Oracle gives their money to OpenAI. OpenAI takes that money and gives it to Broadcom, and Broadcom, and then this gets to NVIDIA, and it's the same money just all being passed around, but everybody looks like they're doing something great. And some of that may be true. There may be some of those things. But you have to look beyond a lot of this into the full sustainability of the business. For example, Oracle has taken a lot of heat lately. In fact, Oracle stock went up exponentially and has really, really pulled back. And you know what people are forgetting? They're looking at the AI play. They think Oracle is too in bed with OpenAI, and they don't believe OpenAI will be able to fulfill its obligations. And when the ChatGPT OpenAI CFO came out this week and said, well, maybe the government would help if we ever got in a jam with a bailout. That was the wrong thing to say. And the current administration came out, and Sam Altman came out later and said, no, we believe in free enterprise. We don't want bailouts. We'll be fine. But it didn't make the market feel warm and fuzzy. It was really the wrong thing to say. Because OpenAI is a private company. Not everybody has full optics into their financials. I'm sure my $12 a month to OpenAI is not helping pay the bills perfectly, but maybe you pay $12 a month too, so maybe that's helping, I don't know. So the market really fell this week because people were questioning the sustainability, the viability of OpenAI's actual business model. And Sam Altman did his best to come out and try to calm the market down. But you look at somebody like an Oracle that really sold off because of this moment, and everybody forgot, and this is not an Oracle recommendation, it's just something to keep on your radar. Please don't forget, this really went under the radar. The whole US acquiring TikTok thing, Oracle is the main funding source behind that. If you believe that TikTok is going to continue to ride out and do well and build a Meta and Google-style advertising mechanism, which it has, Oracle is now the largest US holder of that advertising vehicle. And I don't think that ever got priced in. I really don't. I think we're so focused on Oracle's AI play that we forget that they're the majority US owner of TikTok. That'll come out in the earnings report in a little bit. So those are the things. This is how, thank you for that, Rebecca. These are the things I want you thinking about. You have to think differently as an investor. That's really why we created Moola, in particular the Moola meter, and you're gonna see some cool stuff in the coming weeks as well as to help you get some of these ideas. Because maybe you're thinking like, Jason, thank you for pointing me in some directions here. That's great. How do I do it when you're not there with me, Jason? Right? Like we're working on an ideas screen and some other things that'll be coming to really help you structure these sort of things in the future. By the way, on iOS, Android, I'm still waiting for Apple to push it. Please update your Moola app on iOS. We just launched, I just got the email today, Moola meter alerts. Tyler, you were the one that recommended it, by the way, if you're still watching. You can now, when you do the alerts button in the top right on a particular stock or equity, where we give a Moola meter rating, you can say, hey, alert me when it's a buy, alert me when it's a watch, alert me when it's a meh, or a nope, or whatever it is. So you can now get those alerts as well. You guys asked for that. The team worked very diligently on that. So that's available to you now too, to really help you and give you the guidance. This is how I need you thinking. I need you seeing beyond what the news says. So to summarize, what's the purpose of this live stream, right? Why did the market sell off this week? Why did crypto sell off this week? You get this negative news, but I'm telling you, when I see these sell-offs, what I really see are opportunities. For those of you who just hopped on, I was sharing how Sophia, which is our autopilot smart investor, named after Sophia, our 17-month-old, I was watching what trades the algorithm was making this week, and the majority of the trades were IBIT. Bitcoin dipped below 100K, and she was picking them up. And your Sophia may show down this week. That's okay. Let's check back in 4 weeks and watch what happens. Like, I really believe this and see this moving and trending in those directions. And that's how I really need you thinking. Downturns are opportunities. When a stock goes down 10%, It really has to go up about 12.5 to 15% to get back to where it was. It's basic math. Those are the opportunities I want you to seize when you see those pullbacks. There's my beautiful wife, giving Sophia a shout out, who just woke up from a nap. She's over there eating. I see her. Those are the opportunities I want you thinking about and looking at this week. Remember, Tuesday is Veterans Day, so the markets will be closed, but Sophia and the Moola team will still be working very diligently to help you with that. My point is this: downturns are opportunities. Don't be fearful. Don't be fearful when it shows you're down or whatever. I see down things, down days, down months even, as opportunities to, if you're blessed enough to put more in and lower. Use a little dollar cost averaging. Lower. You know, the most important metric in your Moola app on an asset you invest is not whether you're up or down, it's your average cost per share. And you should know your average cost per share. Again, Tyler, I don't know if you're still watching, Tyler's in the car business. Tyler, you know exactly how much it cost to get that car cleaned and delivered to your lot. And you probably also know how much that car is costing you sitting on your lot every single day. I guarantee it, Tyler's a very, very savvy businessman. I bet he walks around his lot and knows which cars cost him, which car needs to move, which one to tell his guys, hey, we need to really push this one, let's be aggressive on this. You should know. You should know. Will the bond market, I don't know. I saw your comment. Will the bond markets be open on Veterans Day? It is weird to be off on a Tuesday, but you're right. Sometimes, what was the last holiday that was in the middle of the week? And the bond market stayed open. Columbus Day, I think. It was the other way around. Bonds closed and stocks stayed open, I think. I don't know if bond markets are open or not. But Tyler said more than people would think. You got to know your numbers, even in your investing. You need to know, what am I in this stock for? I'm in Goodyear for $6.92 per share. Goodyear, I'm making this up, is at $6.80. Ooh, I could buy another 100 shares and lower that, even lower my average cost per share even a penny. If you watch our $5 Fridays, I'm always looking for opportunities to lower my cost I'm in this investment for. Back to Tyler as an example. Tyler, wouldn't you love that Bronco that's on the lot? Wouldn't you love, if you've owned it for 30 days, to be able to walk outside and lower the cost that you own that car for? Thus, when you do sell it, you increase your margin on it, right? While you can't exactly do that in the automotive business, it's a hard good, you can do that in the market. And that's what I want you thinking about. Rebecca, thank you. Sophia calls it the happy cup. She holds it and runs around with it. It's her happy cup. I originally got it for Magda. I don't think she's ever been able to use it. I think everyone else uses it because they like it. So we all fight over it when it's clean to who can use the happy cup. You got those favorite mugs in your family, maybe? I don't know. It's kind of fun. So anyways, listen, I'm going to let you get back to enjoying your Sunday with your family. Spend time with your loved ones today. I know we talked about investing. And, I meant, if you're on our email list, I meant the email that I sent on Thursday with the little family photo, if you got it. Who are you doing this for? Right? Tyler, Rebecca, those of you watch, who are you it's Sunday afternoon and you're sitting here learning what's up with the market and how I can make next week that much better. Who are you doing this for? Right? Think about that as you're investing. Right? You're doing this for the kids. You're doing this for grandkids that don't even exist yet. You're doing, I don't know what, you're doing this for your favorite philanthropic charity. I don't know. But never lose that North Star of who are you doing this for. And hopefully it's bigger than yourself. Right? There's nothing wrong, nothing selfish with saying, I want to do this because I want to create the life that I wish I had. But maybe it's for you and your spouse. Maybe it's for that retirement. Maybe it is for the kids. Maybe it's whatever it is, right? Have fun, Tyler. See ya. Who are you doing this for? I want you to think about that. Listen, Moola family, thank you so much. Again, on iOS, download the update. Android, I think Monday-ish, Tuesday at the latest, the update should be ready for you. I'll follow up with Google today to see if that's ready. You have Moola meter alerts now, and a few other little features in there as well. So listen, download the Moola app in your app store if you haven't already. It's ready for you. Have a blessed, abundant, outstanding rest of your Sunday. Go spend it with someone important to you. Have an amazing rest of your Sunday, everybody. And drink from a happy cup. Just makes you feel better. Have an amazing day. I'll see you back next Sunday at 1 o'clock. Be sure to subscribe as well so you get those alerts. Have an amazing day, everybody. I'll see you.